can you guys hear me okay? Okay, now it's working. Awesome. So, so we are going to talk a little bit about what was just talked about, but more so on the startup and where we're at now. So my name is Kara Jones. I'm the director of Genius New York. We have a lot of teams in the house today that have gone through the program, but we are funded by the state of New York. We're actually in upstate New York and Syracuse, New York. We invest $3 million into 5 UAS and robotics teams every single year. We've been doing this since 2017. As you can tell, we've had great success. We have 42% international companies, 350 million raised in follow-on funding, great support from New Air. So if you want to learn more, come find me after, but we are opening applications for our ninth round on January 9th, 25. So yes, so now I will introduce the rest of our panelists. I want to start with Mark Green. You want to give a brief introduction?
Hi, everybody. My name is Mark Green. I run technology investment banking at a New York headquartered firm called Ladenburg Thalman. It's a large, old firm, 150 years, all the good things that you need in the States in terms of its network and access to capital. And I've been a technology investment banker for more than 25 years in the UK, in Israel, and in the US. Our firm, we raise money for companies and we do M&A, but we focus on the other ends of the spectrum to the panel you just saw. We focus on very late stage companies or companies that are public and publicly traded in the US. So many of the attributes that were just discussed before are just as relevant for us, but the biggest piece of due diligence for us is, does the company have revenue? Are there customers to talk to? And I can mention that a bit more. We have 3 areas of focus. One of those, known as the 3 pillars, is automation, spelt with AI in the middle. And that's all about AI, autonomy, robotics, drones, and everything that's linked to it. It's a huge growth area in the States. There's a huge amount of energy and interest in the area. It's all very early stage. It's a bit of a Wild West, as you all know, and as the last panel said. And like many industries, it's going to go from being a fragmented industry with far too many companies. You're going to go through the stages of failure, some successes, and ultimately some public companies. Right now, there are very few public companies that are drone companies. Like other industries, it's nascent and it's growing. Happy to discuss more about that area.
Thanks, Mark. Eric?
All right, great. I'm Eric Brock. I am the chairman and CEO of Ondas and our Ondas Autonomous Systems, or OAS business unit. We provide autonomous drone platforms for aerial security and intelligence. Our Optimus system is used for aerial security. It's a drone in a box, as they say. For aerial security and inspection, so think about DFR and critical infrastructure inspection and protection. Our Iron Drone Raider platform is a counter-drone system. It's, again, fully autonomous, and it's what we call hard kill autonomous counter-drone technology. And we capture the hostile drones with a net on a reusable system. These are dual-use technologies, both of these platforms. We go to market with our 2 wholly owned subsidiaries. We have American Robotics, which is a US-based, headquartered in Baltimore, drone services provider. And then we have Airobotics, which is based in Israel. Airobotics is the developer of the technology platforms and is supporting the rest of the world, Middle East, Europe, and Asia.
Alex?
Great. My name is Alex. I'm the founder and CEO of Sunflower Labs. We do, maybe you'll see it in the next slide. We make a drone-in-the-box system for autonomous security patrols. So basically, our focus is very narrow. We just are flying security guards. So the point of our drone is that we can cover a fairly large property, up to 200 acres, all within minutes. We can give you observation of what's going on. We can give you situational awareness. We can process that data. We can analyze it. We can decide what to do with it and what to pass on to the customer in the end of the day. Of course, it's all AI powered now because it has to be. It takes off in seconds. It covers this area. It can operate 360 times per day. So that's the general gist of our product. And I think the unique things about us is because we operate in a constrained environment. We operate over a predefined property. We have dealt with all of the regulatory hurdles. We have approvals in most of Europe and in most of North America, US, Canada, Mexico, a few other places. We have real customers. People really use our system. We are about to do 25,000 flights this year. Our customers are about to do. And it serves a real purpose, and we make money. So I think that's why I'm on this panel.
Yeah.
Thank you.
Awesome. Thank you, Phillip. Gwen?
Hello, everyone. I am Gwen Lighter. I am the CEO of GoAero. At GoAero, we are focused on a singular mission, which is saving lives. We, in conjunction with our partners, some of whom you see here, Boeing and NASA and RTX and Honeywell and Iridium, have for the purposes of this conversation, focused on putting together a global competition where we have asked teams around the world to join us in building emergency response aircraft. If you think of a helicopter at one end of the spectrum, helicopters are great emergency response tools, but they require a pilot. They have difficulty in and out of tight spaces. They are expensive to procure, more expensive to operate over the course of their lifetimes. At the other end of the spectrum, you have commercial drone delivery companies that have payloads of about 5 pounds. What we are asking teams to do with us is to create something in the center, an emergency response aircraft that can deliver a first responder to someone in need, rescue someone who needs help, all without a pilot. It is autonomous. We are deploying these in situations of regular everyday medical emergencies, disasters caused by climate change, humanitarian crises. And so with all of our partners, we have put together this global competition where we invite teams around the world to join us and build. We mentor them, we accelerate them. So too, if anyone is interested in joining us, we have an open call now to join us in teams and potentially win these over $3 million US dollars in prizes. So too, we are bringing on a couple of additional sponsors if anyone from in their companies would like to be part of what we're doing.
Great. Thanks, Gwen. Phillip?
Hi, I'm Phil Buchan. I'm the COO of Cyberhawk. Get that one right. Cyberhawk started in 2008. We were one of the first companies in the world who used, or probably the first to use, drones to do industrial inspections and engineering inspections of industrial assets. Subsequently, we've grown. We're now at, we started off with 4 people in an office in Scotland. We've now got 200 people. We've got about 20 people in Qatar. We've got about 100 people in Scotland. We've got 25 in Denver. And then we've got about 60 in California and a couple others dotted about. We still do a lot of drone inspections. We focus on the energy sector. So we do power line inspections, oil and gas infrastructure inspections, construction monitoring projects. But we also do the engineering analysis of that data. And then we've also got a software platform as well to deliver all that information to the client. I was part of the founding management team at Cyberhawk. I've been there for 15 years. Yeah, that's me.
Perfect. Thank you. So I have 13 questions. Are we going to get through them all? Probably not. But I would love to see just a show of hands. How many people, companies in the room are currently fundraising or about to fundraise in the next 6 months? If you could raise your hands. Okay. How many people in the room are investors or are active and interested in potentially M&A activity? Show of hands. Okay. Everybody else, who are you guys? No, I'm just kidding. Okay, so our last panel talked about the climate, the investor climate, the last few years, the current climate. But my question is for Eric. Given your extensive experience in both the tech and funding spaces, can you just start by setting the stage for the current climate in the UAS?
Yeah, sure.
Yep.
Sure. So I'll just start by saying what we all know, it's a super hard capital market and has been for a while. From my seat, and if I look broadly, the issues aren't around technology and they're not around regulations. Of course, those are important. But I think what we often underappreciate is the progress we've made on both the technical and regulatory side. And I think I'm a relatively new entrant here. I've been doing in the drones sector for about 4 years. So I know folks here, there's veterans with more tenure. But from my seat, I see all the technology and regulations moving up to the right and accelerating, which is very exciting. However, some context as to where we are in the capital cycle is, a lot of companies were born, in and around about 10 years ago. That's when there was a huge surge in venture capital investing in the sector. And of course, in and around that time, you had Jeff Bezos, who was prematurely saying, these technologies were going to come and we get delivery. You had and then you had the dynamic where, DJI and all the success they've had and the political dynamic with the U.S. and the West. So we needed to build the capabilities in the West and build national champions. So there was a surge of capital. We created too many companies, right? So the issue we have is not that technology is maturing, regulations aren't in place. There's too many companies we're spreading capital, we're spreading customer activity, we're spreading revenue dollars too thinly, and that's going to be resolved. It's being resolved in a lot of different ways. But the folks in this room getting together and having conversations about how we take the next level to scale businesses is important.
Okay, so it's a tough funding environment. Mark, I have a question for you. So how do you think companies need to effectively engage with investors, and what are some of the biggest mistakes that companies make when talking with investors that you see, and how can they avoid those?
So I think that, and I just am thinking about this, I think you can boil down to 3 areas of strategy which companies need to get right. And excuse me, I'm looking at my phone because I'm looking at some of the bullets that I put down. As I said, we deal in later stage companies, so we've seen when a lot of it has disappeared away, and if they're real businesses. But there are 3 areas: there's corporate strategy, there's business strategy, and there's an exit strategy. All 3 of those need to be in place to I think, to get investors interested. Some of these we talked about before. On the corporate strategy side, good management is not enough. You have to have great management, secondly, they need to be at one with their Excel spreadsheets. They need to feel like in the matrix with their business plan. They need to know every aspect of it and be connected to it, because without that, they can't answer questions to investors and they can't project where they're going to go. You need a plan, even if it might not be the right plan. You need a plan in place of some sort. And thirdly, you have to understand your company's financial needs, and don't allow yourself to become underfunded, because for that, one of the reasons there are so many small companies is because they're underfunded, and then they start to have aspirations, but they don't have the money to do it, and it's a vicious circle of death, basically, for companies. The second side is the business strategy itself. Positioning is key. You need to be unique. You need to have something that you do differently to others, and in addition to that, you need to be able to explain that to investors, that the ways that you are different. You need to focus on a growing market. You need to be able to show that you can take a sustainable part of that growing market and that you can scale to continue that growth. You need to be able to show you can compete, and you need to, the one word that doesn't come up very often with small companies, you actually need to make some money at the end of the day and be profitable. Because the ability to scale without making money with some future date that you might get there, it's just not going to cut it, certainly not in the public markets in the US. The third part in parallel really is an exit strategy. And it doesn't mean that you're saying we're for sale, quite the opposite. You might want to parallel your business strategy with some of the larger players so you become attractive to them as a potential acquisition candidate. It's not that you're for sale, it's that you can be acquired. And it's a very different way of setting expectations. I used to say my mother, who passed away recently, she was a sculptress. She never sold sculptures, but people bought them all the time. And it's a way of positioning yourself is that you're available and you can be acquired. And I think that without that, it's very difficult to see how you can scale a business and grow it and stay in front of investors, certainly on Wall Street. And I think that your other question is the biggest mistake companies make. It's setting expectations that they can't meet or exceed. And most investors don't really care what you do. They just care that you'll do what you say you were going to do. And the next time they meet you, you've achieved or exceeded the goals that you've set. So when you raise money, you need to be able to show this is what we think we can do. This is what we think we can do with the business. Managing investors' expectations are key for private companies, for public companies, certainly on Wall Street, companies that mismanage expectations. Generally, people don't want to buy don't want to buy the stock. And without volume, without investors coming in, without investors able to get out, they won't come in. Another vicious cycle. And the last point I would say, don't focus on valuation. It's a key mistake companies make. Don't focus on valuation. Focus on what you'll do with the money that you will raise, because there's no point winning the valuation and not actually raising the capital. Because without money, you will run out of oxygen and you won't be able to grow. So.
Okay, so just a few things. Thank you. Okay, so my next question is for Phillip and Alex. So both Cyberhawk and Sunflower Labs operate in industries where scalability is key to survival. So what funding strategies have you found most effective in moving from a niche market solution to a scalable mainstream offering?
You want to take this one?
Sure. So at the start of Cyberhawk, we got some funding and we started the business. And to be honest, there was too many options. We were quite early on in the drone space, and there was too many options of things that you could do with drones. And for the first handful of years, we lost money. We had to use that funding to keep things going. So probably the key thing for us was getting focused on something that made us money, basically. So at one point, a couple of years into the business, like, no, this year we are going to make a profit. And all our focus went on to how we were going to do that, which meant we focused on the industries that we thought that we had a solution that we could make an impact that the customer would want to pay us, and we wanted to execute it efficiently. Once we were profitable, then a lot of things were in our own hands. In the drone space, sometimes there's a bit of hype, and you just sometimes need to get your timing right. We've seen, probably in the UK, we were probably too early to market. We were very, very early. We were probably too early before customers. When we started, there was customers getting us to fly drones in car parks because they didn't think you could fly a drone with a camera on it. We were too early. The flip of that was we weren't too early into the US, and we timed our entry into the US. And we could do that because we were profitable, and we could use our profits to reinvest in the business. So, I think that's one of the ways we did it.
Yeah, I can second a lot of that. Focus, understanding what you do, what you actually provide. I find that saying that we're a drone company is now a net negative. That saying that we are
now a negative?
is now a negative, yeah. It's not a shiny, cool thing anymore. It's now seen as, it's kind of past its prime. But if we're saying that we are a robotic security company and we happen to be flying, that seems to kind of turn the messaging around a little bit. Generally, we mostly fight for deploying one system with a customer, getting them to use that one system, and then trying to broaden it and trying to get them to use multiple systems. And our metric internally to see what the behavior of the customer is number of flights that they do per day, per week, per month, because that actually shows you that they really use it, and it's not just like a pilot project, an experimental thing, which is where this industry has been for a long time. I would say de-risking, and I guess that's another question later, but sort of dealing with the regulations, because everybody instantly says to us, okay, but what about, how can you scale this? Can you really deploy, how many systems could you deploy? How long does it take you to get approval for each system? Each country is a little bit different. Everything has to go through it. So having a constrained, focused use case where you understand the regulatory framework and fighting through it. And then to your point, scale. So literally in my latest deck, the question was, well, how are you going to make $1 billion in revenue? they just don't care if it's less. Like, it's cool, like, but if you don't have a tangible plan, and then you don't have to promise it, but if you don't have a plan that somebody can say, yeah, I can sort of see how this will make sense within 5-10 years to make $1 billion of revenue, not valuation revenue, then it's just not an interesting story anymore. And so you have to come up with something. You have to multiply some numbers in Excel. You have to get really good at that. So those are my attempts.
Do you have any comments on that, Mark? Or?
I'd love to chat to both of you afterwards.
I'll show you my
Thank
spreadsheet.
All right, so I want to jump into some regional funding opportunities, and I think a lot of the audience is wondering, like, where's the capital? So, Gwen and Mark, I'll ask you guys, where are you seeing the most promising funding environments for UAS companies worldwide right now?
Well, I only focus on the US market, so I can't really speak for other countries. I would say this much, from being someone who's lived in 3 different locations, looking at different areas, I think the US is a place focused much more on the dream of what a company can become and looking at the forward numbers and the future numbers than certainly the UK, which wants to look at what you did last year and maybe what you've done in the last quarter. And so you generally get better valuations in the US, and there seems to be more technology-focused investors in the US. And I agree with what you said completely, by the way. Robotics is becoming a hotter space now, but the mixture of robotics and AI as a combination that happens to be in a drone is absolutely the right way to
just
position
sprinkle AI on whatever you do.
But in terms of investment right now, the public markets, there are very few large drone companies. Mm-hmm. There's companies like Ondas, which is publicly traded in the US, and which is a story that our research analysts cover that story as well, and a handful of others. But there's 1 or 2 very large companies and a bunch of very small companies. So you get late stage investors, private equity is interested. I think that investors are looking at investing in roll-up strategies in this space that encompass drones, robotics, security, and cyber. They're all very, very linked.
And Gwen, GoAero has successfully leveraged international partnerships to fund its growth. So can you share examples of how companies can tap into some of the non-traditional funding sources like public good missions or government-backed initiatives?
So yes, GoAero is global. Our partners are global companies, Boeing, RTX, Honeywell. We have NASA, Iridium. Right now, they're in the U.S., I'll just speak about the U.S. and then I'll speak more globally. In the U.S., with the changing political landscape, I think that many companies will now see more funding in the VC markets, and I think you'll see that over the course of 2025 as that's up a little bit more. Globally, I counsel all of our teams who work with us that with fiscal tightening, with money being scarce, especially in the drone world, to, for us, play big on that emergency response aviation for public good mission. But I think that expansion of focus works whether you are in our lane or in another lane. And so I think that companies always need to look at who their end customers are and whether they are pitching for customers or whether they are pitching for dollars. It is incredibly important to focus on how the technology will be deployed in real settings. And I can tell you I have received hundreds and hundreds of pitches where it is both pie in the sky valuation and pie in the sky execution. And so a focus on reality, a focus into real markets is something that is mostly missing And so anyone in this audience, if you are looking to raise money, I would say find those customers, focus on those missions, and be very tight in what you are offering.
Okay, so now we're going to move to your question, Alex, around de-risking startups. So Sunflower Labs operates in the security robotics sector where trust is obviously critical. So how do you de-risk your product offerings to gain investor confidence, especially in a market that demands high reliability?
Yeah, that's really like the most work. The technology and all of the cool stuff that we do is like that's the fun bit. But like the certifications, CE certification, drone class certifications, cybersecurity certifications you have to go through. What ends up happening is you end up talking to a customer and they're 80% there. They love what you're doing, they see the value for it. But then the bits which will kill you is like, okay. But all of the operators need to be trained drone pilots. And you're like, yes. You're like, okay. In US, that's Part 107. You're like, okay, that's like not the end of the world, but somebody needs to study for it, go to a place, take a test. It's like a whole thing. And then we built a system where you do none of it. Like everything you learn in the Part 107 test has no relevance in operating our system, just because it's all automated. The whole thing is completely autonomous. But no, you still have to do that. And then you're taking pictures. We're a security camera. Where do those pictures go? Okay, they go to the cloud. Okay, great. Now let's begin the whole process of sorting through all of that. But without going through all of the I don't know. It almost feels like the dirty work of the business. Like without going through all of that, it all just ends up being pilot projects. And pilot projects is the death of like every startup in the space. Like it's great to get the first one, but he's still doing pilot projects. Okay, nobody cares. It's like that's net negative for you. So before you can scale, before a big company, we have systems with Tesla, for example, before Tesla does anything with you, I mean, they take you apart, right? And then only once you sort of get through all of that, then you can make a case that like, this is a real product for a real customer, and then investors can take that seriously. And then they call Tesla, by the way, and then they ask them the same thing, and they see if they confirm what you're telling them, so.
And Eric, similar to you, so Ondas deals with network technologies and autonomous systems. So how do you address the unique risks of these dual use markets? And what strategies have you found most effective in de-risking your business model?
So in de-risking the business model, I guess it really comes down to focusing on the customers and the use cases where you're going to have the most success. And if I could connect it to the funding, right, to sort of how we're generating capital to execute the business model, support it. Investors aren't really looking for you to tell your vision about your platform and your you don't want to hear about your drone being bigger or faster or smaller. They really want to understand how you're putting together your operating plan. So what I'm finding in terms of de-risking vis-a-vis the capital and investor attention, it's how are you going to scale? What is your sales and marketing strategy? What is your supply chain? Right? The supply chain is a huge issue today. What's your field support, right? And then how are you building the ecosystem so you can use others' talents and capabilities to help you scale? So you don't have to be totally vertically integrated, do everything. So those are the sorts of things we're doing to de-risk.
The screen means we're kind of almost out of time. As we look into the future, this is kind of to everyone, what's one key trend or market shift that startups should be preparing for to stay competitive and attract funding?
One key market shift. I can talk about us. It's come up a lot today. We're looking at beyond visual line of sight, how we can do things at bigger scale, be more cost effective. And we've had some interesting discussions today about beyond visual line of sight regulations. We're currently at the point of where do we invest to do more beyond visual line of sight, and the speed that the UK and the US can put in place frameworks and regulations is affecting it. So maybe that would be a bit to consider.
From our perspective, just riffing off of the BVLOS, for the competition part of what we do, the FAA helped us write our technical rules and guidelines. We have mentors working with each of our teams to make sure that they can certify and fly, and they're mentors from the FAA as well. So we try to bring in regulation from the regulatory parties from the very beginning to work with our teams. And it's kind of a grassroots step-by-step implementation with the FAA from the very beginning. And so a lot of the BVLOS issues that teams and companies face, for us, we will be handling it by working together with them and having them mentor our teams.
I mean, BVLOS is a complicated subject because it depends what you want to fly over. So you want to fly over something small, it's one set of problems. That's what we deal with. You want to fly over a factory. You want to fly over a city, totally different set of problems. So like to preempt some of those questions, like we've dealt with them because we fly in a constrained environment. But like a lot of the companies in the earlier panels talking about doing deliveries over a city, like that's still not there. And it's like, to me, it's incredibly frustrating that that's the case, that we're still fighting this, because the risk is so minimal, but the frameworks are, either still in draft form or non-existent whatsoever, or they're just not clear, and it just becomes extremely difficult. So find a niche thing that you can beat and solve that problem. Solve a problem you can, rather than try to solve a problem that Part 108 will eventually solve, maybe.
Yeah, and part of that also in terms of what we're doing in terms of emergency response, regulators are more willing to work with us on emergency response than they are on delivering a pizza or whatever the case may be. And so we see ourselves as a pathway into a framework that works not only for emergency response or blood delivery or organ delivery, but also for all of the other types of services and products that everybody here in this audience is really focused on.
Well, I'd say I'll speak from the Ondas and how we go to market with aerial security and inspection. Those are massive markets, and for us, we are initially going to target the highest value use cases. And as it relates to operating beyond visual line of sight, we've made investments in our platform to enable it. But we can integrate airspace safety and awareness tools that add costs. But because we're at we are focusing on the highest ROI for customers, we find the customers capable of funding that. And of course, as we're doing that, getting more experience, demonstrating safety, our ability to engage the FAA is that much more successful as we're going on in the future.
Well, at one point, I think just looking at from looking from above, this is an industry. It's not a question of whether it will happen. It's a question of when it will happen. And it's kind of like when you look back at video conferencing 20 years ago, it existed as a technology. It took a catalyst called COVID to make it ubiquitous. And the question is, when we look back in a few years, as I've said on the previous panel, there will be some catalyst which is going to make this move from being, a curiosity to being mainstream. And the parallels with flight originally go back 100 and something years. Flight was a curiosity. No one cared about it until somebody got in one and dropped a brick on someone's head, and they thought, oh, we can use that for bombing people. And I think that that ultimately, to figure out what that catalyst is and to focus on that area as a growth area and to stay the course, that's how to be successful in this industry.
Could I just add? I want to give a little bit more context. I agree 100%. And we got to keep in mind what's so attractive to investors about what we do is the TAMs are massive, right? But it is complex how we put the technology platforms, how we add the autonomy, how we add the regulatory capabilities around this and the field support. But the clear opportunity here is these are technology-driven solutions, and once you crack that code, it gets scalable. It's the S curve, right? So you're going to have an investment cycle here that's 10, 20 years in duration. And we're close. We're close. Part 108 might be one of those key events. If you look at, say, Uber, right, another platform technology or other social media, Uber didn't exist on a 2G phone. Why? Because you couldn't get a map. When you got to 4G, right, we could have done Uber 10 or 15 years before that, but it had to have that complex ecosystem come together, and then it was sort of up and to the right. So that's what that's the industry we're in, and we're getting closer and closer to that. And in fact, I even say we're seeing the drone economy, as we say, is surging today. Demand is surging. Customers are getting more and more experienced and sophisticated. The technology is maturing. So we're in a boom. One of these issues is that there's so many of the companies, no one's really feeling it yet. But that's going to change quite a bit over the next 2 or 3 years.
I'd use Uber as an opposite example. So Uber, the technology sort of matured and technology was available, but the reason Uber is successful is because they did not care about the regulations. They were a taxi, taxis were regulated, and they were actually called Uber Taxi before. They changed their name, they said, we're not a taxi, we're just a car. And they were fighting cities, including London, by the way. There was a big problem in London with Uber for a long time. And they just said, forget it, we're doing our thing, we're plowing along. Once they became big, it was much easier for them to start turning those regulations around. You can't quite do that in airspace. In airspace, you have stuff flying around. Okay, you have a chance, crashing into an emergency helicopter. And so that industry is stifled by all of the regulatory bodies, sort of way, way too slow to move because, they see the risk. They see the risk for manned aircraft, and they basically don't want to take it. So Part 108 is months behind. NPRM was due in September. Officially. It was not released in September. Maybe it'll release by the end of the year. That starts a clock ticking for 18 months before that goes into effect. So anybody sitting waiting for Part 108, that's good luck with that. And then, everything else is sort of covered here already.
Yeah, so let's hit some of these questions. I know you just touched on that one, but how are companies going to survive while we wait for these, right? So I think we've kind of hit on this, but is there anything that we missed, Phillip? Anything that you're...
I guess at Cyberhawk, we've constantly looked at the market, what our customers want, and we've made sensible business decisions and worked within our means. And I think it's going to be the same as regulations move, as things move. We're going to constantly make sensible business decisions and try and grow profitable business.
And then Eric, this one was...
Is there a very specific one? I think a shareholder here. Is there a return of my investments? Listen, we are building a very valuable company, but I didn't come here to pitch my stocks. So.
Alex, I think you already kind of hit on that one.
Yeah, we developed our own. It uses as an ADS-B receiver that works in Europe and US. It also supports MLAT, OGN, and FLARM. So whoever asked that very specific question, if you want to know more, find me afterwards. But again, we fly over a fixed property. The receiver is on the base station. We can see 500 miles away, by the way, so we can cover a pretty large area with our receiver.
Thank you. Estimated timeline of revenue generation to meet expectations from drone companies in Europe.
You're going to me?
I'm looking at you, but I'll look at everybody.
Spent on revenue generation. I go back to the previous question that you asked, which was, what's going to happen? I think the answer is capitalism happens, and many of the companies won't survive. And those that, like Darwinian theory, you have to adapt to survive. You don't adapt, you will become extinct. Estimated timeline of revenue, I don't know how to answer that question, to be honest.
On this, I'll just come back to what I said a moment ago. I think we underestimate how demand is strong it is today. And you're seeing companies grow significantly. In fact, some of them are here. I mean, Phil's got a fantastic revenue story. I know. Glenn Lynch was on here earlier. These guys are building businesses that are scaling. They're profitable. They have path to profitability, and they're at that point that we're going to reinvest. And I think what we need to see here from a corporate standpoint is the consolidation Mark's talking about, where successful companies can come together and generate more what we call operating leverage, right? Because we got so much duplication of efforts on sales and marketing, field support. We're competing for customers, and that's driving pressure on returns because it's costly to do that, and there's price competition. So you're going to see consolidation be a huge part of that scaling and profitability over the next several years.
Is there investment if we continue to follow authority mandates, or must the industry learn to persuade rule makers, adapting rules that align with market needs?
I mean, yeah.
No.
I'd say the single biggest problem for the drone industry are the regulations. That is essentially destroying 90% of companies.
All right. Well, thank you, everybody. Thanks, guys. That's all our questions. Thank you.
Thank you.